Welcome to your Profitable Law Firm podcast. I'm Kelly Brubaker, your dedicated host, passionate about empowering law firm owners. Let's dive into the hidden strategies that lead to overflowing profits, scaled growth, and thriving lives. This is where overwhelm transforms into confidence, enabling you to create and enjoy your dream firm and your dream life. If you're craving additional information to help you better manage your business that isn't found on the typical financial statement, this episode is for you. Why do you need more information? The standard financial statements were created by accountants for accountants when small businesses did not exist to the extent that they do today. And while the accounting industry has evolved from using an abacus to pencil and paper to computers, the basic financial statements have only minimally changed over time. Meanwhile, small businesses have grown from the handful of mom and pop stores on Main Street in every town to more than 33 million small businesses across the US. What do 33 million small business owners have in common? Most do not understand financial statements, and most need information that isn't even reported on their financial statements to manage their business. For example, your financial statements won't tell you how to make more money, if you can afford to hire another employee, or why you have $150,000 in net profit this year, but only $25,000 in your bank account. So, what else do small business owners have in common? First, you want your business to be successful, but you don't know how. It's a journey filled with dreams, hard work, and dedication. Running a successful business involves more than just the numbers. It's about making strategic financial decisions, understanding your unique financial landscape, and ensuring that every financial move aligns with your business goals. The challenge lies in not knowing exactly how to navigate this intricate journey. It's like having a destination in mind, but lacking a roadmap to get there. Embarking on a journey of business ownership is a courageous step, and there are unique challenges that come with it. One of the most prevalent dilemmas business owners face is what I refer to as the catch-22 of business ownership. It's a situation where you want to grow your business, but you need cash to accomplish this. But you can't get more cash without growing the business. You began your business because you're an expert in your field. However, the reality is that to achieve growth, you often need financial resources. Without sufficient funds, you might find yourself caught in a cycle where growth becomes a challenge. When was the last time you took an unplugged vacation without worrying about the business falling apart? This sense of indispensability can lead to burnout and limit the scalability of your business. There is an intricate balance between managing day-to-day operations and creating a business that can operate efficiently. Breaking free from the hamster wheel of being indispensable is crucial for your well-being and the longevity of your business. This overwhelm can extend beyond the professional realm, impacting your personal life and relationships. Sadly, this scenario is a shared experience among many business owners. And fifth, do you know what works and what doesn't in your business? As a business owner, it's essential to have a clear understanding of what drives success and what might be hindering progress in your business. Business decisions should be rooted in a deep understanding of the factors contributing to success or potential challenges. Standard financial statements are valuable, but might not tell the whole story for business owners. The solution to each of these issues lies in creating consistent, positive cash flow for your business. Okay, you may be thinking, wait a minute, you started off talking about my P&L, and now you're telling me to work on my cash flow. Your P&L does not tell you a lot about your business. My goal with the last podcast episode was to help you tweak the format of your P&L to make it more useful than the standard out-of-the-box report provided by every bookkeeping system. Because nearly all business owners have access to their P&L since it is a standard report provided by all bookkeeping applications. My goal now is to introduce to you one new report that I can add to your monthly reporting package, and this one's a game changer, I promise. For my CFO clients, I call this the Diagnostic Dashboard. But this is something that you can create for your business. It's a report of your critical metrics or your KPIs. By tracking your KPIs, you'll gain a quick understanding of what works well and areas that might need adjustment. Having this level of clarity empowers you to make strategic decisions based on data-driven insights. It's about transforming uncertainty into actionable knowledge, ensuring that every move you make aligns with your business success. So let's walk through how to create your KPI report. This is the process I use with my CFO clients when creating their diagnostic dashboard. First, define your vision. Document your vision for your business. For example, why did you start it? What are your business goals? And what keeps you motivated? Be honest with yourself. Your vision will need to be updated annually. Second, goal setting. Based on your vision, determine your 5-year goals for your business. Now, from this list, narrow down to the top 3 to 5 goals you will want to focus on for the next 12 months. I want to emphasize that I said 12-month goals and not current year goals. Do not let today's date be an excuse for you to put off doing this. Work on this now and set your goals for the next 12 months. For each goal, identify 1 or 2 KPIs that will tell you if you are meeting your goal or not. For each KPI, determine what you want this KPI to be in 12 months. Calculate each KPI for last month. Now, what is the difference between your 12-month KPI target and now for each target? Break down that difference into monthly milestones to guide you. Goals will need to be updated every 12 months. And third, monthly reviews. From the last step, you will have identified anywhere from 3 to 10 KPIs. Do not let the format of your KPI report be a stumbling block. Ask your bookkeeper or a staff person to prepare this for you. Once you have a report drafted, update and review your dashboard every month after your books have been closed by your bookkeeper. Celebrate achievements and determine the next steps you need to complete in order to reach your next milestone. So on my screen is a diagnostic dashboard. Now, this is for a fake company with fake information, but I'm sharing with you what your KPI dashboard could look like. Again, I'm just sharing so that you have an example to look at to see what's possible. To start, remember, we start off with determining our vision for our business, our 5-year goal, and then from that 5-year goal list, we narrow down the top 3 to 5 goals. For each one, we're going to pick a KPI, 1 to 2 KPIs that's tied directly to that goal. If we meet that goal for the KPI, we will have accomplished our 12-month goal. So I work primarily with law firms. I have a database of about 50 different KPIs. And once we've determined the 12-month goals, I work with clients to go through and figure out what the best KPIs are to track, that if you meet the KPI goal, then you will have accomplished your 12-month goal, which helps you then accomplish your 5-year goal. So I'm tracking the name of the KPI, a category for it. For example, is it client development? Is it profitability? Does it measure cash flow or productivity? Something to that effect. Okay. So I have a category for each KPI, and that helps when trying to figure out which KPI per goal. And then for each KPI, what does it tell us? And then what's the formula to calculate it? And then I've kept track of a suggested frequency to measure, because certain things like doing surveys of employees or clients, you're not doing that every month. You're going to do that every quarter at the most, some only every 6 months. So I have a list here of, for this KPI, how often we're going to track it. And then I also have an industry average, and I update these manually every time I get access to a new survey. So when somebody like Thomson Reuters does a survey and I see the results, I will update my metrics if the KPI was something that was within the survey. But so I do my best to be on top of the industry average, but I will tell you, I don't really hold a ton of credence in industry averages because there's a lot of factors that an industry average does not consider. I keep track of industry averages because that's usually a starting point with a conversation when I talk to a client about a KPI goal. First, we go through and determine our KPIs. Once we have our goals, I list each of the KPIs on a separate sheet. So I have a KPI goal sheet. And again, I'm just going to reiterate what the KPI name is and then the industry average. Because here's the point where we're going to start defining the company's 12-month KPI goal. And having the industry average here is just a starting point for this conversation. You cannot come up with directions on where you're going if you don't know where you're starting. Running your business is no different. You need to know where you currently are and your destination to be able to come up with the roadmap to get you from point A to point B. This is exactly the same. So for this, in my example dashboard, the first month that's being analyzed is October of 2023. So the current KPIs are for September of 2023. So that's how we know where we are. And you'll see I have columns, one column per month. In 12 months, the 12th month will be September of 2024. So those KPI numbers, the goals, have to be what your 12-month goal is. And then I'm taking the difference between where I want to be and where I am, and whatever that difference is between my starting point and my ending point, I am dividing it by 12. Meaning I need to improve 1/12 of the difference of the gap from where I am today to where I want to go. Nothing is a straight line. And that's okay. These are goals. Just how when you're driving, you get off the exit ramp because you need to fill up with gas, it recalculates. That's what we do. So don't overthink this. Just start off with your goals. Make each month between now and the next 12 months 1/12 of the difference of where you are today from where you want to be. And we can update the monthly goals each month as we move along. One thing I want to point out in my fake company example is that I do have a column where I'm identifying whether the company goal for each KPI is better or worse where they are today. Now, you may think, why would I want to track a KPI that I've already achieved? Because it might be a critical KPI that you cannot afford to do worse than where you currently are. For example, employee satisfaction. Industry average is 0.8 or higher, and the company's goal is 0.85 or higher, so 85%. And the last survey done of employee satisfaction, you scored a 93%, 0.93. I don't want to go below 85%. So I'm just going to put the minimum bar at 85%, and we'll be able to see the status of this on the dashboard. But definitely there are going to be metrics that you've already achieved that you want to continue to track because you don't want to backslide. So now that we've selected our KPIs, we've determined the goal and where we currently are, we need one more step. We need to actually calculate each of these things going forward every month. October ends, the books get closed, the bookkeeper's done. And whether you assign this task to somebody in your office, to your bookkeeper, or you do it yourself, wait until your books are closed. And that way you know you have final numbers for the month. And so you would sit down the first or second week of November to prepare this report. Now, for illustration purposes, I clean this up a little bit. So my sheet starts with KPI, the formula to calculate it, the source. So my first one, total lockup. The source is a KPI that's below. It's one of my, I need two other KPIs calculated in order to calculate this KPI. Maybe for client satisfaction and employee satisfaction, Stacy, who's my office manager, handles all the surveys. So I would need to contact Stacy. So I have a column in here where I track the source. so that I'm not scrambling every month to figure out, oh my gosh, where did I get that information? I just make notes in here so that I know where to go. For example, collection rate. Collected fees divided by billable hours. I need to go into my QuickBooks file and my billing system to get those two pieces of information. I do the calculation and put the final number in here. This is a simplistic overview of this sheet. I didn't want to make this complicated or overwhelm you with information overload here. Okay. So once I've gone in here and I've determined the final KPI, I've calculated the KPI for each month. And so at this point now, we've done October, November, December. These final numbers for the KPIs pop up on my dashboard. Let's talk about what's in my KPI dashboard. I've got my KPI, what category it's related to, what it tells us. So you don't even have to think about, why am I looking at this KPI? I'm going to just put it right here on your dashboard, and then just keep an eye on the 12-month goal. For every KPI, there's two lines. The top line is the actual results by month, and the second line below that is the goal for that month. It's color coded so that if you met or beat the goal for that month, the box turns green. If you did not meet the goal for that month, it turns red for your actual numbers. You can glance down the column of that month on your dashboard, and you will know immediately what's green is good and what's red is bad. And one thing, because I know just looking at numbers and looking at color-coded boxes doesn't always jive with every person who's reviewing this. So the next thing I do is, for every KPI, I go through and add one new sheet in my spreadsheet, and I have a graph. So this is a combination graph that shows a bar and a line. The bars are each month your actual numbers, and the line is the goal line. So for example, this KPI number 1 was total lockup, and the line here shows where I wanted to be with this KPI. And then in October, I beat it. The bar is taller than the line. November, I did not meet the goal, but back to December, I did. I beat the goal. So this is just a visual, same information. It's now in a graph. It's just a different format, different presentation, plus it's isolated to one KPI to help better focus on it. And so I do that for each of the KPIs. For my CFO clients, the dashboard is just the starting point. Once you have the information, now you have to do something with it. When I sit down with my CFO clients every month, we look at their dashboard. It's not just going and saying, oh, we had more greens than reds, or we had more reds than greens. The conversation then, I include this in my Excel file, is we keep track of action items. If you didn't meet a goal, let's talk about why you didn't meet the goal and what do you need to change in order to meet the goal next month. In this action items for next month, I just list all of the KPIs that we're tracking for this company. The action items: client satisfaction, goal was met, keep up the good work. Based on the survey results, continue to send welcome boxes to new clients and celebrate client wins on social media. Be prepared to send the survey to clients in January. And then also who this got assigned to and what the current status is. At this point, this is done, it's completed, and I have a due date, which is always the next meeting. So if this was the result in October, then if there's an action item, it needs to be accomplished before the next meeting in November. Consider billing every other week instead of once per month. While this will increase your admin costs to bill more often, cash in the bank will be a dramatic improvement. Also consider offering credit cards and increase your fees by 3 to 5% to cover the merchant service fees, and or requiring a retainer so that bills can be paid with funds held in trust as soon as a bill is issued. So we assign that to Joe, and it's currently in status, and it's due before the next meeting in November. So this action items for next month is just a log. So you're documenting the conversation you had, what you can do to improve this KPI, or keep track of the things that you did well. And it's going to be obvious when you go back to your dashboard next month whether you accomplish something or not. So looking at what an example dashboard could look like for your firm, Isn't this something that makes it easier for you to manage your business instead of a P&L that only gives you half the story? And before I go, remember profit is something you intentionally plan for in the beginning. Thanks and have a great day.